Hello everybody, welcome to the technical analysis webinar with AvaTrade. My name is Troy, I'll be leading the session. As we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure everybody's up and running okay. Just type OK in the chat box if you can hear me clearly and see the screen all right. Okay, looks like we're up and running fine. I've got enough replies. Thank you. All right, so interesting times. Certainly coming out of the US anyways, interesting times with all the chaos that went on in Washington, DC yesterday, last night. Leading up to the certification of the election results. Looks like things are going to calm down moving forward, maybe in that regard, but it certainly shook the markets a bit. And we'll take a look at what happened on some of the assets and what opportunities it presented and still could present, as well as some other storylines that are going on. So the technical analysis is definitely being driven by some fundamental news that we'll outline a bit before we get on the charts for the technical analysis. Now, keep in mind, as we go over different trade concepts and ideas, that you should understand each and every trade has risk. No one trade is guaranteed to have profits. And so there's risk of loss with each and every trade, but also understand that there's a good potential for profits as well with each and every trade, which is why we're all here, to go over from an educational perspective, ideas and strategies that hopefully will improve upon your return at the end of the day, end of the week, etc. Keep in mind that what we cover is not meant to be financial advisement. Now, what is technical analysis? Real quick, basically, it is looking at the historical movements on the charts, usually candlestick charts, and trying to find patterns, trying to find trends. And so as you look back at the historical movements, you might find price levels or movements that help you to predict maybe what you think will happen with future movements. And that's the idea of technical analysis. And when you understand the fundamentals that caused those price levels and those movements, that can really help you out as well in terms of choosing which price levels and support and resistance and trends that you trust and which ones you don't for entry points and exit points. So we'll go over those concepts and those ideas today on the charts. As we go along, please feel free to ask questions, to give input. I'm happy to share information that you have as well and answer any questions that you have. For the most part, we'll lean on what we call manual methods of technical analysis, where we're drawing our own lines, our own price levels, and looking for entry points and exit points that way. On occasion, we do look at indicators, and indicators are another way of doing technical analysis. Really, the indicator does the technical analysis for you and tells you when, based on the indicator, you might want to buy or sell based on the indicator readings. And we tend to use indicators more as a confirmatory mechanism rather than the outright strategy by itself. And what I mean is, if your indicator is telling you to buy and you also do your technical analysis on the chart and you think, yeah, I also think it's the right time to buy, then that would be a confirmatory type strategy where maybe you have a checklist of looking for what you want to find with your technical analysis and then also wanting the indicator to agree with you, and then you place your trade, and that can work really great many times. So let's first take a look as we get going. Before we jump on the charts, we'll take a look at AvaTrade's offerings in terms of the web trader platform and the AvaTrade Go mobile app, because we mentioned risk in the beginning of this session. And what's nice about the web trader platform and the AvaTrade Go mobile app is it helps you manage risk in a way that makes it simpler. And so I'll show you those features real quick. If you want the AvaTrade Go mobile app, you just point at trading platforms, go to AvaTrade Go, and you find the download here for whichever app store you use, depending on your operating system. And all the features we're going to go over on the web trader platform here in a minute, you also find on the mobile app. Okay, so they're in both places. If you want to trade on the web trader platform, you log in from our main website here, and you'll find that you'll be on a platform that looks like this. Okay, and you can change the view, you can expand the chart to full screen. You can draw lines on the chart just like the MT4. You can add indicators. They're listed as studies. You have your indicators here. You pick the ones you want and then save, and it adds them. So fully functional platform. But what I really wanted to show you was, since we talked about risk, and I think it's important before we get into the technical analysis to look for trade opportunities, I think it's important that you understand how to manage your risk. And the platform that we're looking at here really helps in that manner. So if you're trading on gold, silver, or FX pairings, what you'll find is a special feature called AvaProtect. Okay, AvaProtect, you choose that, and you can say, I think maybe gold will go up over the next 2 days. Okay, fine. If that's what I think, I'm just saying that as an example, not that I really think it has to go up over the next 2 days, but if that's what you feel, maybe because the Democrats won the Senate, control of the Senate, that means they control the entire government and presidency now. They have control of the House and the Senate and the presidency in the US. Maybe you think that that means more stimulus will come. Democrats love to hand out extra money. And so maybe you think that'll weaken the USD, causing inflation, and that gold should go up. Okay, if that's what you feel. So maybe you say, okay, over the next 2 days, gold plunged down about $50, $60 an ounce yesterday. And so maybe you think it's due to rebound back up in the next couple days. But you don't want to risk that if it plunges another $60, that you lose that much per ounce. And so maybe you say, okay, I want to do, I don't know, 15 ounces, but I don't want to risk if it drops, $50 per ounce. I don't want to risk that much. So I'll do AvaProtect for 2 days. And you can do it by the hour, by the day. And you say, okay, I'm only risking 211. Okay. If it drops even $20, I'm losing more than that, right? So this caps your risk for those 2 days at that cost. Anything you would lose during that covered time period would be added back. And your potential profit, if gold goes back up $50, right, is a lot more. Every $10 would make 150. So if it goes up 40, that's 300. That's $450 potential profit if it goes back up that distance that it dropped. And your risk over those 2 days would only be here. Okay, that's the cost of the protection. So in certain circumstances, you might say, okay, I like AvaProtect. It's a unique way to manage risk for defined time periods, for a flat cost. Okay, for a defined cost as you go into the trade. So that's an option for managing risk that you don't have directly from the MT4 and MT5 platforms. Okay, and it goes directly into your technical analysis. If you're taking a buy on gold as the example, and you say, boy, if it breaks the support level I'm looking at, maybe your technical analysis tells you, wow, there's not another support level for $50 down. And then you say, based on my technical analysis, if I'm wrong here, I could really lose a bunch. So let me do AvaProtect instead for a defined cost. So it's an option as part of your risk management plan. Now, let's say you just want to do a stop loss. And if I'm buying from 1916, the price 1916, I might say, okay, I don't think gold will drop below 1890 maybe. Maybe that's my idea, is that I'll go to 1890. And I look and I say, wow, I'm risking like $400 to that stop loss. And if your account was in euros or pounds, it would calculate in your account currency as well. So again, this platform and the AvaTrade Go mobile app is helping you with your risk management. The order window before you buy or sell is acting as a trade calculator, telling you your potential loss to your stop loss price. Maybe you say, okay, I better only do 10 ounces. You say, okay, that's better. I'm only risking 270. It lowers my potential profit, but now maybe that fits into my risk management plan better. Or maybe I want something less than that. But at least I know what I'm getting into based on the trade size and my stop loss price. It's calculating my exposure. And the same for my take profit. Maybe I think gold will go up to 2,000. I want to know how much will I make with this trade size. Okay, I could make 830 plus and only risk 262. Okay, great. I could set that in action. If I take, 3 attempts at a trade like that and I'm right once, I profit. My risk is almost only a quarter of my potential profit. And so this is a good way to get control of your risk management. All right. Now, the technical analysis is the topic of this webinar. So what we can look at here on this platform, there are free signals with technical analysis. So on all live accounts, and if you're here as a demo user, if you haven't opened a live account yet, what you'll see on the demo account is when you go to the advanced features, Trading Central, you'll see the economic calendar, but you will not be able to use these other features. So I would say get a live account to try out all the features if you don't have one. Analyst Views gives us some technical analysis. Okay, tons of signals coming in each day for currency pairings, and it gives you the total breakdown, where the price levels are, support and resistance levels, where you should enter, exit, preferred directions of trading. Everything's here. Okay, these signals, and you have the time that the signal came in, the date and time. Okay, 1204, 1203, 1202, 12 o'clock, 11:59, etc. So these are recent, some older, but you know if they're older. Okay, and you can still see if they're relevant, even if they're older. Maybe they didn't break the price level within the signal yet. Okay. Good morning, David. Welcome. Okay, so technical analysis here done for you. All right. And you could trade off of these and see how it goes. Okay, there's no guarantee on any one trade, but this could be very helpful to your technical analysis. There's also fundamental analysis in these tools from Trading Central. Market Buzz gives you some fundamental articles, news articles for different instruments that are trending. Okay, so if you click on any of these bubbles, the larger bubbles are trending the most. So Twitter, Facebook, why would Twitter and Facebook be trending big now? Because the Democrats took control of the Senate. They won those last 2 seats, and they're really big on regulations, government regulations, and the tech stocks might be the first target for heavy regulations coming down on them because of the monopoly type situation many of these tech companies have. So, and really that's bipartisan in the US to come down on Facebook, Twitter, Amazon, some of these large companies. I think you'll see support from both sides of the aisle in the US with regulations potentially coming in. So you saw a pullback of the tech stocks while the rest of the stocks went up because they're expecting more stimulus. But you can get that type of fundamental news and read about it by just coming here. You can see what's happening right here. They're talking about election, what happened. It'll explain to you the fundamentals behind why did some of these tech stocks drop, or whatever instrument you click on, you'll get fundamental news about. Real quick, I'll show you the fundamental news I pulled up before we get into the technical analysis. European stocks edge largely higher. Okay, not all the stocks are higher, but largely they're higher. By largely, they don't mean they're up a large amount. They mean largely overall, most of the European stocks have been bullish, have been rising some. And the reason, additional stimulus hopes. And that's interesting, right? European stocks up already because the market's open, right, for European stocks. US market didn't open yet. Probably you could expect the same type of bullishness when US market's open. And that's going to play into your technical analysis preferences here in a minute. The additional stimulus, it's US stimulus they're talking about, but up go European stocks because of it, right? That just shows you how truly global the marketplace is. You know, the Brexit situation affected stocks in the US and vice versa. Stimulus in the US affects the equities, the stocks and indices in other areas of the world as well. But we see momentum today. Stimulus hopes rise. You don't see a lot of doom and gloom because of what happened in Washington, D.C. yesterday. There was an initial pullback in the markets, and then that kind of faded. Now we're looking at the futures are green. Okay, here, U.S. futures, green all day today. Volatility index down over 5% now. It was down even more earlier. So really, if volatility is down, that means fear is down, and the futures are green. That's positive sentiment. You can see that right away. You can see it in the headlines. U.S. Congress certifies Biden hours after the riot there in the Capitol building. So they pulled it together and they went ahead and certified the election. Biden will be sworn in January 20th. That eliminates uncertainty. And the markets hate uncertainty and they love certainty. So even if maybe some companies, some areas of the economy would have preferred Trump's policies, what they really don't like is indecision. And now at least there's certainty in what's happening. And so that's creating optimism as well. And so that could be viewed as a positive headline there, that Congress went ahead and certified Biden's win, and now everything is ready to move forward. Trump also, after all of this mess, has said he will have an orderly transition to Biden's presidency. He's not saying he's going to object to it. He disagrees with it. He vehemently disagrees with it, but he's going to go forward and respect that that's what the Congress certified. And so that's good news, because he could have come out and said the opposite, and that would have created more instability. So right now, this is why fear is dropping and the futures are green. It's like all the headlines are falling into line now for an orderly transition in the U.S. Okay. Also, investors reposition for stimulus. There's likely, almost certainly, more stimulus coming in the U.S. We mentioned that already. One thing to look for down the road a bit is when, the question is probably not if, but when will Biden and the Democrats in the U.S. raise taxes on corporations? Because that would be a big negative. You know, it's not in the headlines yet, but when it hits the headlines that, hey, they're going to push to increase taxes, they control both houses of Congress in the U.S., the House and the Senate, both branches of government, and also the presidency. So if they want to raise taxes, they will raise taxes. Nobody's going to be able to stop them. So that is on the horizon in this year sometime, I'm sure. So keep an eye out for headlines that could cause a huge pullback in the market if there's certainty that, hey, taxes are going to be raised on corporations and businesses. So that's something that could come. And also regulations. Regulations could increase on the oil industry, all types of segments of the economy. So this is something to keep an eye out for. But right now, it's all roses with the optimism, with maybe additional stimulus coming. The markets love free money. And we see U.S. payrolls declined for the first time in 8 months. So COVID is having a negative effect on the economy. Really, the only thing causing the market surges up, at least in the U.S., is this stimulus. Okay, that's what's propping things up. And so there could be a hard crash eventually once the stimulus dries up and the realization of tax increases in the U.S. come about. All right, so let's get on the charts and see what's happening. And if you want to request an instrument or two to take a look at, feel free to request in the chat box. Type OK if everyone's with me. If you would, type OK in the chat box. I just want to make sure everybody's still with me. Okay, I see you're with me. I have some requests for instruments coming in. Great. So sure, we'll take a look at the Dow Jones. Right now I have the Euro USD up. You see the Euro pulled down against the USD. Okay. Thanks. I've got enough responses. Thanks, everybody. There must be just a little delay between when I ask and then about 30 seconds later, the responses come. Okay, so why did the USD strengthen and pull the euro down? Because of all the fear that hit the markets with this whole riot situation in the US, and maybe some fear about COVID. The US dollar tends to strengthen kind of as a safe haven currency when there's fear. Now we understand things have calmed down, and look at the technicals on this. Euro USD, look at the support level. If you see that support level there, do you trust that support level? Tell me why you might trust that that support level might hold. And it has something to do with what we just talked about. Does anyone have an idea? Why might you trust that the USD would weaken now and the euro would climb? Why is that something that could look opportunistic as a potential trade? What's happening that might cause the euro to be able to climb against the USD? Okay, there was a panic sell. Good. Holly, I'm with you. People sold off the euro and bought back into the USD because of the panic that was created last night in the US. And that's why the USD strengthened, right? Why might the USD weaken now again, allowing the euro to bounce back up? Why might that be a move that might make sense? Certainty, sure. And stimulus, right? If the Democrats are almost certain to increase more stimulus in the US, right? What does extra stimulus do to the value of a currency? If another trillion in USD is printed and passed out to help the economy, what happens to the value of that currency? I'm with you all. The fear index is low, which means probably the euro would go up and the USD would weaken. Stimulus. Yeah, Christian, I'm with you about the stimulus and also the certainty in the markets now would help people say, okay, I can buy into other currencies now. So for several fundamental reasons, you might trust this support level. Okay. Now the technical analysis also makes sense, right? Why does the technical analysis make sense? Look at this support level. Look here, once it broke above this price here, it was support and up. It broke below once, and when it got back up, it became support again, tested it again, support, tested it again, support. So this is a nice technical entry point to buy from. It's a support level, okay? It's a support level. Ernest, yeah, we're still live. I don't know, maybe you're not hearing me. Let me type a message for Ernest. Yes, still live. Okay. All right. So you get my point here. We've aligned fundamentals with technicals. The technical analysis here is that's a nice support level. It's only been broken once here out of 1, 2, 3, 4, 5, 6 attempts it held. I like that percentage, right? 5 out of 6 or 6 out of 7 times it hit that price level, the currency bounced back up. The instrument bounced back up off that price level. So that's a nice support level. And these are 1-hour candles. So this price level held very well over the past days, not just hours, right? Going all the way back to last week. So what we're looking at here then is little risk, very little risk. Your stop loss can be right down here, right? You don't have to risk much. Your stop loss can be just below the support level. If it breaks the support, okay, fine, you can get out with a small loss, no big deal. If it does what the historical movements show it did more times than not, and the fundamentals are on your side, more stimulus coming in the US should keep the USD weak, then it makes sense technically and fundamentally to take a shot to buy off the support level, okay? And to anyone who's new, if you don't understand what I'm saying about support or resistance, please ask, okay? Support is a price level that holds without breaking, or if it breaks, then it plunges like that. It's not just a small break, it broke through by multiple pips. Then once it went back above, it held again, it held again, and it held again. Okay, so this is the idea of support and resistance. Now, if you did buy on Euro USD, where might you take profit? Okay, we know today, not that long ago, just back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours, it was here. If 10 hours ago the price was here, why couldn't it get there again? So it's reasonable to assume that even within the day, or at least within the week, that you could take profit just before this resistance level, if indeed the euro is going to strengthen against the USD. So if we've read the tea leaves right, and if the fundamental news doesn't change on us, then our take profit could be somewhere right up here. So if I then if I take a buy position here, okay, let's say I buy, okay, if I put my stop loss down here, okay, just drag off your entry point, you can put your stop loss. Okay, I'll put my stop loss there, and I'll put my take profit. Again, just left click and drag, and you create your take profit line. I'll put my take profit just before the resistance. Why would I put my take profit just before the resistance? Anybody? Andrew will go over the idea of support and resistance again. I understand you're a little confused. Why might you take your profit just before the resistance level? Anybody have an idea? Why would you take your profit just before the resistance? This is where the price hit and dropped. Hit and dropped. So if it goes back up, yeah, to be sure to get your profit, right? Or to be more sure. Anyways, there's no guarantee it'll go up there. But if it does, look what happened the last 2 times it hit this price up here where I drew this line. The last 2 times it hit this price, it hit and plunged. It hit and plunged. So if I had my take profit up here above that price level, it might not get there before it drops, right? So the idea here is if you're scalping, if you're in it for more of short-term trades, you probably want to take your profit before the next major resistance level, which that's why I put my take profit line just below the resistance so that I can take my profit before it might potentially drop down again. Yeah, exactly, Bright. I'm with you. It's exactly what we're saying. It's likely to start hesitating anyways to climb more once it gets close to the resistance. And so it could plunge back down just like it did here, just like it did here. Okay. All right, great. So that's the Euro USD. I bet we'll see something similar if we look at maybe GBP USD. Okay, similar, right? Support level here, pull down, pull back here. Why might the pound strengthen? There's been a Brexit deal, right? The pound could easily strengthen. There's some optimism in the UK now. And if the USD is expected to weaken, just like the Euro USD buy, you could do a GBP USD buy position. Okay. And again, stop loss could be down here below the support. Take profit somewhere up here near this resistance. Okay. I think the Euro USD looked a little prettier, but the pound sets up similar as well if you're interested in trading on the pound. Andrew, are you okay on this support resistance thing now? What we're looking at is support level is a price level where when the price hits, it doesn't drop any further. It supports the price and it bounces back up. It hits, it bounces back up. It hits, it bounces back up. It hits, it bounces back up again and again and again. That's a support level, a price level that the instrument has trouble dropping below. And resistance is the same idea, but up here, a price level that the instrument has trouble going above, and it drops when it hits that price. So here's the resistance, here's the support. Okay, I hope that clears that up. All right, let's look maybe at gold. We see gold at a huge pullback, okay, partially because the USD strengthened. Okay, we see there's a support level down here, right? You see this was an old resistance level. Resistance, down, resistance, down. Once it broke this resistance, it went way up. Now we see this big plunge. Where did it stop? Exactly at that old resistance, which once you break above a resistance level, it becomes support. So this was the spot last night to buy. Okay, it plunged and it hit the old support level, the old resistance level, which once it was broken acts as support. That's exactly what happened. It stopped dropping exactly at the old resistance, which is the new support level right there. And that's where it bounced. Okay. Now the question is, will gold continue back up? If the USD has inflation, if the US dollar has massive inflation because of more stimulus, what is likely to happen with gold? Gold is an inflationary safe haven, meaning if the US dollar and major currencies are inflating, having inflation, meaning dropping in value and the cost of everything goes up because it takes more of them to buy something because of all of this stimulus lowering the value of the currency, that typically tends to drive gold up as a safe haven, as a safe haven from inflation. Okay, up she goes, right, Holly? So you don't have to risk much. If you wanted to buy on gold, you could put your stop loss below this support level, right? It was tested and held. This support level was tested and held. So you're probably pretty safe to say, if I buy on gold and put my take profit, I don't know, up at the high that it hit yesterday, put your take profit somewhere up here on 1950 something, and you put your stop loss below this support level, you're pretty safe to say that unless something changes dramatically in the fundamentals, then that's probably a pretty smart trade. Now, could something change in the fundamentals? Of course, right? There's always the likelihood of a headline that could break, that could cause the opposite movement. And that's why you have a stop loss maybe, right? Or some other way of hedging with a sell stop position maybe below the support to cover yourself. But in some way, you have to understand you need to cover your risk because the movement could reverse, because fundamental news can change. With one headline, news could change. You know, if an article came out that said, Biden says no more stimulus, what do you think would happen if Biden came out and said no more stimulus? The US dollar would strengthen and gold would drop. That's likely what would happen. So you have to be prepared for the unknown, that an unlikely headline might come. And so that's why you say, okay, I trust this support level, especially after this bounce, right? I trust the support level, but I'll put a stop loss or I'll manage my risk in some way because the news could change, right? So if I'm buying on gold now, I have a larger potential profit to the ceiling that it hit yesterday than I have to risk to my stop loss. So it's not a bad move, right? So that's something you could think about as well as a potential option if you're aligning a nice technical entry point, a nice support level that was tested and held with the fundamental news of US dollar has a lot of weakness. Okay. Like I said, you won't be right every time, but our euro trade looks good right now, starting out nice. What kind of pending order could you put if you think this might test the support level again before rising? If you think gold might pull back down before going up, I could put a pending order to buy from down here. What kind of pending order would buy from a lower point than the price is now? I could prepare a pending order as a buy. Remember, there are 4 types of pending orders. I could say buy limit. Buy limit buys from a lower price. I could say if the price goes to 1902, then I'll put my stop loss below it at 1895. I'll put my take profit up at 1955 because it hit there yesterday. And there we are. Now I have the best of all worlds, right? If gold pulls back down, I get in from a better price. I can risk less to my stop loss then to get below that support level. And I have a larger potential profit to the resistance level up here. And you just have to be patient then in this case and hope that it pulls and hits your buy limit and then it buys and you're closer to the support level. And so that's a better entry point then. Natalie, correct? You were the first to type buy limit. By the way, on the web trader platform, if I show you real quick, you don't have to pick buy limit or buy stop. You see, all you have to do is say execute when price hits. So I could say execute when price hits 1902. That's it. I don't have to tell it whether it's a buy limit or a buy stop. The platform already knows that. It knows that's a lower price, and so it automatically makes it a buy limit. So this order window on AvaTrade Go and on this web trader platform simplifies the pending orders. You don't have to be so technical. You just say buy when the price hits here, and that's it. If it's a buy limit, buy stop, doesn't matter. It'll make it the right one. Same with sell. If you were on the sell option, execute when price hits. Same thing. Okay. Especially for new traders, that really simplifies things because it can get confusing when you start saying buy limit, buy stop, sell limit, sell stop, and you end up trying to program it and get mixed up. Okay, why don't we then also look at oil? Why is oil going up so much? We look at 4-hour candles. Look at oil. Up, 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 up. This is over weeks of time. These are 4-hour candles. And then why all of a sudden did oil shoot up here so like a rocket just yesterday and today? Why did oil shoot up so quickly? Natalie, I understood. I didn't think you were saying goodbye. Buy limit. Yeah, it was Russia and OPEC plus, they call it, OPEC plus nations. Russia agreed not to increase production. Saudi Arabia even agreed to cut production further. What does that do for oil prices if production is not going to be increased, but rather decreased? What happens if there's less oil being pumped? What happens to the price? Yeah, they decided not only not to increase production, but they decided even to decrease production. And yes, that causes price to go up, right? Causes price to go up. Navajit, the start time was scheduled for this time each week. I think maybe you're thinking of Tuesday. Tuesday's webinar starts later, 6 p.m. GMT time. All right, but we have the Tuesday and Thursday times. Yeah, price goes up when one of two things happens. If supply goes down, price goes up, right? And if demand goes up, price goes up. And the fact is both are happening right now at the same time, meaning there's stimulus going out to different governments or different economies around the world, which helps to increase demand for oil. And now OPEC Plus said they're not going to increase production yet. And in fact, some are willing to decrease production more. And so that helps drive oil up as well. So the fundamentals aligned with a couple things at the same time, optimism about stimulus and optimism about decreased production of oil drove oil price up, and it broke the 50 mark. That's a key price level, the 50 mark. It broke above 50. So if you're looking for an opportunity to buy on oil, okay, and don't let me keep you from selling. If you want to sell on oil, certainly you can. Right now we're looking at 4-hour candles, yes, and we can look at 1 hour. We can look at 1 day. I was looking at 4-hour candles because I think it shows us some nice price levels that I want to point out, okay? And let me remove some of these lines. And I'll show you what I'm talking about. So if we draw a line of resistance, I see here, okay? The price got near this line here and dropped. This was back on the 17th. Got up here and dropped. Then it got here again and plunged again. That was right at 50, right? 49.75, okay? Round numbers many times are important in traders' minds. And so as we look at this chart, we see we got near 50 and the price plunged. We got near 50 and the price plunged. We broke above 50 and it became support. Look, support, 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 up. So what type of pending order? Again, if oil pulls back down to this support level, what kind of pending order would buy from this support level on oil? If oil wants to push back down to the support, that would be a buy limit pending order, right? So you could say right at 50, if the price hits 50, I want to buy, because now I think now that it broke above 50, maybe that will act as support. Now you could be wrong, right? So again, you're going to put your stop loss down here if you like that potential move. And the sky is the limit, right? There's no resistance anywhere close on the 4-hour candles if you got in at that price. So maybe you say, I don't have to be so perfect with, it's within $1 of 50. Maybe you want to buy now, right? If you're bullish on oil based on the fundamentals. So you have the option to do a market move. You could wait and see if it might pull back in order to buy. Okay, you have a couple options there. And certainly if you feel like oil is overbought and it should drop, then don't let me keep you from selling. Okay. If we look at 1-day candles, there's no resistance over here. You can't see any resistance on the chart. There's nothing to stop the climb in terms of the candlesticks. If we look at 1-week candles, then we start to find that, look, this was a major support level right at 50. Remember I said 50 was a magic number. Right at 50, it was support. Support, and this was for months. These are 1-day candles. Support, support, and then the crash. Look at the momentum it took to break below 50. That's the type of momentum it took to get below 50 last time. Now we're above 50. So I don't think so easily it can break back below, right? Because it took so much momentum before to break below. And now we have stimulus. And now we have vaccines, etc., and a cut in production. So oil has a lot of reasons to stay on the top side of this old support level that we see on the 1-day candles. And I take that back, 1-week candles. So this support level was there for months and months and months. These are 1-week candles. And then it broke once, and now it's back above. Okay, so that's a major support level that it just went above here. This was the spot where it went above. So pending buy limit down here just above 50 could make a lot of sense. You don't have to agree, but the fundamentals tell us that, and the technicals also show that that is a major support level. So in this case, it's another buy limit possibility at 50, maybe 50.1. So if it reverses just before 50, you don't miss it. Okay. Stop loss could be just down $0.50, something like that, 49.5. These are just examples, everybody. You don't have to place these trades. It's a simulation, but you might like them. You might like the ideas because they do make sense. Take profit. If we want to determine a take profit, we better find a resistance level. I see up here. On the 1-week candles, you don't see resistance until way up here above 60, right? I see a little resistance here. Okay, you see this was a spot it hit and dropped. So that might be more realistic for a shorter term move, about 54.8. Okay, we see a little corner of resistance here on the 1-week candle. So 54.6, just before that resistance level. And there it is. So we've got our pending order ready to go with, what do we have? Potential profit, almost $5 per barrel. Risk, 50 cents per barrel. So what kind of setup is that? You could keep trying with that setup and be wrong 8 times and be right once and still profit. It's a 10-to-1. It's a 10-to-1 ratio from buying from the support to taking profit at the next resistance level. Okay, and in that case, you don't even have to wait for the pullback, right? It looks like it is pulling back, but even if you bought now, your risk to your stop loss below the support is still a lot less than the potential profit to that next resistance level. Okay, so you might deem that this is a good enough price to buy, 50.6. Maybe you don't want to wait till 50.1 to buy, right? That's up to each individual trader how perfect you want to be with your entry point. But it could likely push back to the support level. We'll see. You might do both. Maybe you take half your position now and set half of it as a pending order in case it comes down further. That's up to each individual trader, but I think it looks good technically speaking. Obviously, no guarantee, but technically speaking, and the fundamentals are behind it, that maybe that 50 level will hold, that it's a nice support level. Okay. All right, everybody. I think we've looked at enough for this session. We've been going for 45 minutes. Any quick questions before we end things? Holly, you're welcome. Thank you for attending. And you can apply these concepts on any instrument, and you'll see, you'll start looking at these candles and they start to look like music notes, repetitive patterns that are predictable. You see where the tempo changes. Same thing here. These were repetitive, like repetitive notes, and then here's the change in tempo, and here's your new level. Okay. All right, everybody, you're welcome. Thank you for attending. And till next time, good luck with your trading.